Hi planners, this is episode 29 of Money Talk. Well, for April, it is actually the month of financial literacy. And we know we want each and every one of you to be financially free and to reach your financial goals. So we are dedicating this month to teach you little financial tips and tricks to help you earn that passive income. You know, you wonder what is passive income? Passive income or residual income is that income you earn with doing little or no work to it, no effort, no maintenance, nothing at all. It's literally that income you earn when you are sleeping. Yes, we want to earn that income when we are sleeping as well, right? But this month we are only focusing on one guest speaker. We will only be doing topics on investment and money. So without further ado, let us welcome Renaldo Belfon as we discuss today the types of investments you can use right here in our Caribbean country. Good afternoon, planners. Well, today, as I said, we are having a special episode which is all about financial literacy. As you always know, I always like to encourage you guys to not just think about money for now, but money for the future, but that passes in that you could earn even when you are sleeping. So, without further ado, we are extremely happy and thankful that we have the wonderful Mr. Renaldo Belfon, right, to come and talk to us about some important investments we can have right here in our Caribbean country. We don't have to be outside to be able to get in these investments. So, you guys take note, ask any questions, comment below, let us know if what we said made sense. If you all want to get more information, you can always reach out to him as well, and he will definitely give you more information. So without further ado, let's say thank you first to begin for taking time off to be here and share your wealth of knowledge on this great topic of investments and money.
All right, thanks for the invitation, man. And I must say that it was a long time in coming, man. Over a year, more than a year ago, almost a year and a half ago, we made arrangement. We'll do something. So a year and a half later, here we are,
man. Nothing never
Yeah, man. So for those who don't know, today is actually Good Friday. We're recording this on Good Friday. So it takes quite a lot for my good host to come out to work on Good Friday. So I have to tip my hat to her as well, man.
So tell us what you do and how you really started this whole thing before we get into the whole investment and types of investments we can have right here in Trinidad State.
Okay, so as you highlighted, so my name is Renaldo Belfon, and I'm the managing director of Scrio Business Group, which is a bit hard to define, but it is a real estate company, and it's a holistic real estate company. And we focus on doing investments, doing brokerage, which is our bread and butter. And we have a education division as well, our education/media division, because we spend a lot of time and energy promoting financial literacy and giving free resources to the public, because financial literacy is such an important topic that we created a whole division just to promote financial literacy. Right? And so we're about 6 years old. In fact, on August 16th, 2021, Sciro Business Group will be 6 years old.
Congratulations.
Yeah, and I think we've come a long way, but we still have a long way to go to, match where our vision, has in store for us.
Okay, what is always important, no matter where you reach it on the ladder, it's still something to celebrate, right? I always say.
Definitely.
So when we talk about investment, what are great investments starter points can anybody start? Because most people always say, oh gosh, that sounds like much hard work. What I could do that easy. So tell us, what are some simple investments that anybody, when I say anybody, somebody who just have no knowledge of this thing, that you could start without having to worry about, okay, what to do, what's the next step?
Right. Well, let me deal with something you said before I delve into the types of investments. People always say that, oh, it's too difficult to get started, and they may not feel the motivation to get it done. But I think later on in the other podcast we're going to record, we're going to delve into the how to get involved in the different investments. But I think it's important to understand the why. And when you understand the why, then you will see, okay, I really need to make this a priority and bite the bullets and commit myself to continuous learning in order to get my investment journey started. And I always remind people of one simple thing. I know a lot of clients, it could be doctors, lawyers, whoever, investing must be a part of your plans, because no matter how good your job is, no matter how good your salary is, you cannot pass that on to your children.
Correct.
You can be the number one engineer, barber, surgeon in the Caribbean, in the whole wide world. There's nothing you can do to pass on that job to your children. And so the aspect of legacy is a big part of the why it's important to get involved in investing. So whenever people trade, that's not important. We get a good salary, good job. Once you understand that, then the why takes care of that why, and then you get that motivation to dig deeper into what sort of assets I should be investing in, what is best for my family, what is best for my future generations. Not to get too preachy, but the Bible teaches us that a good man leaves an inheritance for his children's children. No, not even his children, his children's children. So as a mother, as a father, you have to be thinking not only of your children, but 2 generations, even more generations down the road.
I always a stepping stone, because I always preach that there must be a generation well for the next generation to come and for them teach them, so that they will know what the others are coming after. So remember that.
All right. Okay. So once we take care of the why, let's delve into what we can invest in.
All right.
Now, there are so many things that you can invest in right now. It's crazy. You have the whole cryptocurrency craze going on. It has the Forex, cash FX is something that falls under Forex that people are interested in. So there's a wealth of opportunities for you to get involved in. What I advise people is that you invest in what you're comfortable with.
Correct.
Now, that is not to say that you cannot learn more and go further. That goes back to the point of continuous learning. But invest in what you are most comfortable with, and keep growing. Never get comfortable.
True.
And so, from the standpoint of ease, I think we could look at different asset classes and look at the pros and cons, and we could kind of rate them in terms of their ease of getting started in it. Look at the risks and rewards and that sort of thing. So for those who may not know, an asset class is a group or a type of investment vehicle that shares common features. All right. So there's people categorize asset classes differently, depends on who you talk to. But for 5 of the main asset classes I want us to discuss today and touch on fixed income,
right,
which are things like bonds and fixed deposits, because the one of the first investment vehicles or asset classes that people are introduced to are fixed deposit. You're in the bank, you have fixed deposit, that sort of thing. A lot of us familiar with that. Another is commodities, which is things like gold, silver, those sort of things. We're familiar with gold and silver, but more as jewelry than as an investment. but believe it or not, investing in gold is such a big thing around the world.
Yeah.
And it's something that we need to do more, especially in India. Gold is like king.
Yeah.
And so I think with a little bit of knowledge, then that is an avenue that we can invest in more locally here in the Caribbean. Another is equities. Equities is a big word for essentially a part of a company.
Mm-hmm.
And for by and large, we're talking about publicly listed companies here.
Mm-hmm.
That is possibly the easiest method to get involved in equities. So on the local stock exchange, we have Prestige Holdings, which is the franchise holder for KFC. That's just an example of a stock that you can get involved with. And for people who are from TNT, I always tell people, as long as he has one Trinidadian left on planet Earth, Prestige Holdings will never go bankrupt. As long as they have one Trinidadian, KFC will not go bankrupt. Prestige Holdings, the franchise holder of all the KFC outlets in TNT, among other things, they have Subway and stuff. Not that this is a plug for them, but this is just an example of a company that we are all familiar with, that we can invest in as early as today, once you set up a brokerage account. So equities, stuff like, stocks and bonds, what we're talking about. If you want to get more fancy, you could go into private equity and angel investing, that sort of thing, VCs, but we leave that to the advanced course.
Well, we could do a future one on that, because people do ask just investment thing. I was like, wait, why we need that? So that might be a good topic to do. Don't worry, we will put it in.
All right, definitely. Well, we could find the time and do it, man. Right. So the fourth one is real estate.
Yes.
And real estate is something that's all around us. All right. But I think we need to be careful on whether real estate is an asset for you or a liability.
Right.
And we'll talk more about that soon. But what I see is a lot more young people using real estate as an asset, because most people either own, aspire to owning land and eventually owning your own home. Mm-hmm. And most people can't afford to buy real estate cash. So that means you have a mortgage to pay at the end of the month, which is a liability. Right. However, as we'll dip into soon, you'll see that there are ways that you could either break even or actually make money on residential real estate. So on your own home, and it's something that I have personally done, and I encourage all my friends to do. A strategy called house hacking that we'll touch into soon. And there are other forms of real estate that are becoming more and more important, like warehousing, that sort of thing. All right. And the last asset class we're going to touch on is the one that we're all familiar with. Although it's kind of weird to hear it, we call that asset class is cash. Cash in the bank.
Yes.
Yes. And it's funny because as a youngster, I was always preoccupied with saving. And we have a lot of people who love to save, but they don't know how to invest and make money off that cash, because the returns on savings account right now is 0.00000 recurring. So true. A saving. Something that we have to learn a bit about. All right. So those are the 5 asset classes, broad asset classes. Of course, below them there are subclasses that we could go into, but for the interest of time, we're going to focus on those 5: fixed income, commodities, equities, real estate, and cash.
Well, I know for sure you hit some nice points. You hit some nice points there. I think we get. Oh, your mic is off. Yeah. You're back now.
All right. Sorry about some technical difficulties.
Yes, we do have that. We can have that. Yes, you really hit some important points there, and it's very important that people are aware of the different levels and areas they can invest in, and it's not just only one area alone. So those were some very important points. And you are right. Okay, we're getting technical difficulties. Okay, yeah, he's back. You are right to say yes, most people do go in and only save and don't use back that saved money to invest in other stuff. Yeah. You need to make that come back and grow that. Yes, I'm hearing you.
Yeah, yeah. So it's funny you mention that because I was telling my girlfriend the other day, as a youngster growing up, you had the piggy bank. I remember going when I got my bank card, I would save my money, and I would. There's an ATM right down the street from my house. I would go to the ATM, just check to see how much money is in my bank account, get a little boost, and then walk back home. So
Yes,
whenever I need to pick me up, I would go do that.
well, you see now, at least you had a card. In my point of view, for me now personally, I never used to like to have the card, so I used to have to go to the bank to see it, so I will know this is how much money I have, and I don't touch it because for me, I say, okay, I don't want to get myself tempted when I see the money. You know, you have that behavior when you see the money, I would want to use it. So I didn't have a card for that particular account. So I always had the more than one account, something small. That was the importance of having the profitable system, but I always had more than one account, and one particular account I had no card for. I would just put money in there and just forget it. It don't exist.
Yeah.
That's
All
it.
right.
That's what I'm saying.
So on that point, let's look at when we look at cash
Yes.
as a asset class. It's weird to think of cash as an asset class,
So,
but some people consider it one, and I do too. And it's one that we're all familiar with. And so let's look at some of the pros, some of the cons. Pro, from the little child selling mango and cheddar on the side of the road to a CEO, you have access to cash. You earn cash in some way, shape, or form. One of the benefits of having cash is that it's very liquid. So if you need to make a purchase, you finally decide, I'm buying the BMW today. You can have access to that cash to do whatever you need to do. So it's by its very nature, it's a very liquid asset. And it's relatively safe to hold. In TNT, I believe, once your money is in a bank account, you have insurance protection up to, I believe, $60,000. Dollars.
Yeah.
Correct in that figure? Yeah, I was wondering about that. I always wonder, though, if you have multiple bank accounts, will each one have $60,000 protection, or is it $60,000 for individual?
I'm definitely not 100% sure, but I know
Right.
I know they always used to advise you to have accounts in different banks. I don't know if the purpose of doing that was so that you make sure you get the maximum value.
All right.
That one I can
Right.
Right.
Right. So anybody listening or watching this video, if you know the answer, please feel free to comment below or send us an email, because I really need to know. So I don't have to cut up my money into different bank accounts to get that insurance protection. Right. So it's relatively safe, although I don't know how it is around the world, but here in the Caribbean, we still have people banking in the bank of mommy and daddy mattress. So cash is safe, but it has to be in a bank. You can't have cash lying around in large volumes. And I say that jokingly, but I recently had a colleague of mine who, when here in TNT, we changed the $100 bills recently, and they had over $100,000 in cash at home.
$100.
And so it was an ordeal to get that money changed. And if you see them, you would not think that they have that kind of money just stashed around. It's not a huge security risk, but that's the reality. There are some people who, for cultural reasons, for whatever issues they had with banks, they don't. They're unbanked.
I have met many of them who don't.
I can imagine, right? So, what can I say? There are options in terms of, just in case your bank annoys you, you could always switch to another bank. So I advise people put their money in their bank account so you could get the benefits of having this asset class, the relative safety. Another benefit of having cash is that it's not as volatile as some of the other asset classes. Yes, it goes up and goes down, but you could essentially park your money there, and then when the time is right, maybe you want to move into another investment vehicle, then you can make that transition relatively quickly. But as you park cash, your major challenge or risk is inflation.
Correct.
Is that gradual increase in the price of stuff that you need for your daily life, your groceries, that sort of thing. That is a major challenge, because when you post money in the bank, the returns that you get in a fixed deposits, not fixed deposits, or in a savings account is extremely low. So you run the risk of the purchasing power of your money being degraded. So let's say you invested, you put about $1 million in the bank today. In 10 years' time, due to inflation, the stuff that $1 million could buy 10 years ago, you could probably buy a small fraction of that now. Now, I was looking over some projections, and they project the inflation rate in TNT to be between 1 and 2% for the next 2 to 3 years.
No.
I personally, I suspect that I'm hoping that it stays within that band, but I could see a scenario where it is a lot higher than that. So those persons who have a high volumes of cash on hand need to keep that in mind over the next couple of years. The potential for inflation, especially those persons like in states like the US, where there was a huge increase in the money supply. There is substantial risk for inflation. So I guess that is one of the major cons in holding cash, is that the returns are very, very low. So it is good. You need some cash on hand on all the times, but you just need to balance between your different asset classes.
True. That is true.
Right? So I think that's a good starting point, because everyone knows about cash. And as we go into the different asset classes, you'll find that there's pros and cons in terms of risk versus return. And so generally, the higher return that you can expect or hope to get in an asset class, you have to take on a bit more risk. And so as we go into the further types, I think it's always good to use the return that you get in cash in your usual savings deposit as the benchmark to judge the others. Because if you're going to get as much money in just a savings account than if you invest in a property, you might as well keep the money in the bank, because it is less risk. Right? So that is one way to judge an individual investing opportunity in the different asset classes. Right? So if we go on to another asset class that most people are familiar with, is fixed income. And fixed income is
one of the first,
Say again?
I said one of the second ones you normally go and get.
Yeah, most people are familiar with that. You get a fixed deposit in the bank,
Right.
or you buy like a government bond. For instance, TNT government issued a government bonds a couple of years ago, and the returns, I believe, were between 4 and 8%, depending on how long the maturity date was. So fixed income asset class, there are different pros. One of the pros is that it's relatively low to medium risk. It's easily available. It's predictable income as well.
Correct.
But I guess one of the cons, well, a few of the cons though, is that there is the risk of default, and that goes into a bit of the management of bonds. Usually you find that the higher the return on a bond is the more risky, the riskier the company or state that that issued the bond, or whatever fixed deposit scheme that you find. So high yield bonds, aka junk bonds, they might right now they offer somewhere between 6 to 10% sometimes returns, but there's a higher risk of that company going bankrupt and defaulting than a low risk bond. So some of the high risk, I'm trying to think of some of the high risk bonds on offer right now, high yield bonds. none coming to mind, but I could use an example from in the past. A pretty big company. Those persons, I won't say old, but of a certain vintage, would remember WorldCom. WorldCom was a pretty big company that offered very, very high yields. I think it was like between 12 and 16%, and a lot of big, international companies, international retirement funds invested in WorldCom because they were attracted by the high yields. But in the end, WorldCom went bankrupt and they lost. So even with fixed income, you can manage the risk reward. You just need to know a bit more about the financial integrity of that company in order to make an informed decision. Right? But so right. And of course, the fixed deposit is one that we're all familiar with. It wasn't that long ago that fixed deposit was paying like 8% right here in TNT.
Yeah.
I think right now it's some like point something. I think it's less than 1% now. I stand to be corrected, but it's very, very low. But that is a low risk way of getting involved in investments. So maybe if you're want to ease your toes into the water, starting with a fixed deposit might be a way to go to get some of your money out of cash to get a slightly higher return. And so you can manage your risk because nobody likes to lose money. True. So you can maybe start there.
Nobody wants to lose anything.
Exactly. All right, man. Right. So that's fixed income.
Correct. They had stocks.
No. So stocks. The stocks you said?
Yeah, because I remember that was the third one you said, stock.
All right. So stocks, another higher class. Benefits of stocks. Like I said, it's really good to invest in stocks in that inherently a bit about the companies that you invest in stocks with, and how equity in. Right, you need to do your research because just because you know the company or you know their product or like their product, it may not be a good company to invest in.
Correct.
For instance, I am pretty sure that I'm a top 10 most rabid Manchester United supporters in the world. I'm a huge, huge fan of Manchester United since I was a baby. And Manchester United PLC, the holding company, is actually listed on the stock exchange. Right. And for sentimental reasons, I was going to buy some of this stock. But when I look at the returns, I was like, I don't think they paid a dividend. The price to earnings ratio was terrible. I was like, let me stick to being a fan. So even with investing in companies that you're familiar with, you need to be a bit objective and separate the fan from the investor. For me, investing, you need to be in control of your emotions. And so before you start, call up your broker to invest in the local or even international stock exchanges. You need to do research into the companies that you're investing in.
And that is so true. That initial research and understanding the company, that just as you rightly say, just jump in. I like it. Make it
yeah.
The money talks. The money always talks.
Yeah, because one of the drawbacks is no matter how much you like a company, when you're an investor at the general common stock level, you have very little control on decision making.
Correct.
So you have very little control, and there's actually there can be substantial volatility in the value of a company based on some decision or comment that a CEO made that you had no input in.
Correct.
And just a couple of weeks ago, the price of bank stocks in the US, it dropped some like between 10 and 20% based on one event. So I guess that is one of the possible drawbacks, is that you have very little control. There's the potential for a lot of volatility. So if you're not a seasoned investor or don't, detach yourself emotionally, when you go and you look onto your brokerage account and you see the value of your portfolio drop by 25% overnight, um, you you have to be able to manage those emotions.
Correct.
And
Correct.
so
Like,
while go ahead.
I was not going to tell you that is why some people, at least listening to some of them, I have heard that, especially people who do forex and they want to have to tell when they realize they get up in the morning it did not perform the way how they expected it to perform. And
Yeah.
you rightly say emotion, something you cannot have when it comes to
Mm.
shares or stocks or any of those things, or even the forex. You can't have that emotion. That emotion you have to live in passion for too. Because you will lose some time, but you don't want to lose your whole mind and your body.
Yeah. Well, a good thing that investing in equities and stocks allows is that you can manage that risk a bit of volatility, in that you could invest in a broad range of companies. Now, I don't mean you invest in Pizza Hut, Domino's, Mario's, and you invest in all the companies in the same sector, but you could invest in companies in different sectors to help manage that volatility risk. And you could invest from a geographic standpoint. So invest in some companies in the US, some here locally, some in India. So you could help manage that risk a bit. Right? And the beautiful thing about that is with the advent of online brokerages, is just a click of a button. And you could move. So it's very liquid. You can move the money very easily between investing in Starbucks to investing in Boeing to investing in some of the local companies here, like BP. No, I don't think BP on the local stock exchange. But like Bitco, not promoting smoking. That just come to mind for some reason. All right. So that is the benefits. It's very liquid. You can manage the risk through managing, what type of companies you invest in. And honestly, there's a potential for very high returns. Once you're able to manage that volatility risk through the methods we discussed, there's potential for very high returns. Me personally, I'm no expert at trading, but even in this, I would consider myself a beginner. But even in the volatility in 2020 with all this COVID and that stuff going on, I started trading in the US stock exchange and got returns of close to 9 to 10%, somewhere around there. And one of my colleagues also, we started around the same time. She got similar results. So there's a potential for much higher returns than if you invested in a fixed deposit or a bond or cash, as you mentioned before. But there's the risk. So there's a risk reward trade-off. However, with proper research, you can learn how to manage that risk. So you could never completely get away from risk, but you can manage it.
Correct.
Right.
Most important thing, having that balance.
That's correct. All right. So another vehicle that we don't really think about much here in the Caribbean is commodities. And I'm thinking specifically about gold, silver. There are other commodities that people invest and trade in, like oil. So you could buy oil on the markets. So it's similar to trading in equities in that you can, it's very liquid. You could move the money around very quickly. You could get back your money. You could sell it very quickly on stock exchanges. And for gold in particular, though, gold is seen as a hedge against inflation. So most people invest in a little bit of gold so that, gold tends to perform well despite inflation. So it keeps up or beats the inflation targets. So that is, people call gold the insurance policy in your portfolio.
Okay, let me ask you, what about other metals?
So silver is the one that I personally am interested in. Otherwise, some of the more industrial metals, the I guess the cycles and how to manage them are a bit different.
Okay.
Because, for instance, copper is an industrial metal. So, in times when people are ramping up production for some reason, copper will be in more demand. So, you can invest in copper and in times like that. Another commodity that people, for instance, don't think about is coffee and sugarcane, that sort of thing. In that, right now, about a month ago, the president of Ghana indicated that Ghana is no longer going to sell raw cocoa beans, which is the prerequisite for making chocolate, to Switzerland. Because when you think about it, cocoa is relatively cheap, but high quality chocolate is extremely expensive. And so he made the move from an investment standpoint to help, I won't say nationalize, but they're making moves for Ghana as a producer of cocoa to keep that cocoa locally and produce high value chocolate rather than export it to Switzerland for next to nothing, and Switzerland reap the benefits. And he invited the Swiss to invest in local Ghanaian chocolatiers and maybe set up chocolate producing companies in Ghana to help capture some of that value add. Because I tell you something, Letitia, I was in Germany about 5 or 6 years ago, and I remember I was in southern Germany, and there was a big chocolate festival. I'm talking about the night I went, it was like 3 nights. The night I went, there was close to 100,000 people there.
Wow.
Twice the population of Tobago. And you had chocolate beer, you had chocolate hot dog, you had chocolate high quality chocolate, all kind of chocolate. And I remember talking to myself and saying, Ronaldo, there's not a single cocoa tree in all of Germany.
Yes.
Why is it that they have a chocolate festival and we don't? Think about it. There's not a single and I was in southern Germany, so I was close to Switzerland. There's not a single cocoa tree in Germany, not a single cocoa tree in Switzerland. Why is it that they associate Switzerland with chocolate and not Ghana and the Ivory Coast, where that chocolate is produced? So investing in commodities like this, because you could buy cocoa on the stock exchange. People use it more as a trading device, or if you're a chocolate producer, to guarantee that you're going to have cocoa in the next 6 months, you will buy a certificate of delivery for cocoa at a set price to ensure that you receive it. Now, some people use that as an investment vehicle where they have no intention of receiving the cocoa, receiving the oil, but they buy the certificate knowing that, okay, if there's a hurricane, for example, the price of cocoa will increase and the value of this certificate I bought will increase. So that's a more advanced form of investing that you can get involved with. But the only risk is if you don't, for instance, if you buy an oil certificate, which happened last year during the downturn, essentially you are buying a contract to receive that oil. And unless you are able to sell that, then you have to receive that bottle of that barrel of oil. And I don't know if people know what oil smells like in its raw form, but it is terrible. And so we had people who want to, invest in oil because the price going down because of the decline in global economies during COVID. But they didn't realize that until somebody called and said, we have 10,000 barrels of oil for you. Where do you want it? And you have no infrastructure to receive oil. So that is one of the drawbacks of investing in commodities, storage. Whether it's gold, whether it's cocoa, whether it's oil, whether it's sugarcane. Once you buy the certificate, you have to put stuff in place for storage or sell that certificate before you receive it.
Wow.
Right?
You see, that shows you the importance of doing your research. Don't just jump something and don't understand what it entitled and what it's supposed to do and all of that, which is don't really do. You just like to jump in and see everybody doing something and don't understand what what is entitled? What does it
Yeah.
mean? As you miss.
Yeah. So with all that said, you could get medium to high returns in the commodity sector once you know what you're doing.
Right.
So as you go up the scale, I guess your level of knowledge in the underlying asset it needs to go up as you go up from cash to fixed income to equities to commodities.
Right.
Your level of knowledge of the sector and the amount of research that you need to do goes up. All right. And I guess the last point that we have to touch on is the sector that I'm most familiar with, which is real estate.
His favorite topic.
Right. So stretching, because I could talk for the next 2 hours about this and even scratch the surface on real estate.
But that's why we have that for a whole episode, because I know this.
Right. So real estate. Real estate is essentially land or any, I guess any feature on Earth, which could also encapsulate both air rights, so the atmosphere above you, and geological rights, so what goes on below you. All right, but we ain't going that deep. We're focusing on what we know here and what the common man understands about real estate. We do know land, right? Now, in terms of land tenure, not land tenure, land ownership and property ownership. Again, the statistics are a bit dubious in my opinion, because on the one hand, we have relatively high home ownership rates when you look at the official statistics in TNT. But when you delve a little deeper, who is the actual owner of the property? Because when you think about it, a statistician, a data collector going around collecting statistics on home ownership, or if you look through the deeds in the Red House, that sort of thing. If you have 3 generations living in a whole house, which is common across TNT, across the Caribbean, and you ask each of them, "Oh, do you own your own home?" They might say yes. So let's say you have 6 adults in the home, then that will count. Statistically, that'll count to 6 home owners. But at the end of the day, whose name is on the deed?
Correct.
The owner of the deed, the legal owner of the house, most times in the Caribbean, might not even be alive.
Correct.
Because his grandpa buy a piece of land, build a house on it,
True.
and then I grew up there. My auntie and that generation, some of them still live home. I have an auntie still live home. Our uncle just come, go and come thing wherever he marriage mash up, so he come back home thing. And then I have my children.
Sure.
So we have a multi-generational households in TNT. And there are pros and cons to that. The pros are obvious. The social benefits, although they can have significant social negatives to having multiple generations in one property. Oh gosh, boy, because I'm sure you can tell me stories when it comes to who's the owner of the house and who have rights and who pay for this, and mommy did leave that for me, and
over which piece.
Right. And from the river to the mango tree is supposed to be for Johnny, and from the mango tree to the cherry tree is supposed to be me. That's another thing. Oh gosh. It is an issue, and it's one that we need to tackle, and I think the state needs to take the lead on that, on managing our real estate resources. So looking at it, there are some. Let me start from the negatives. Though I don't already reach the negative when you have the family back and all over who take the land and inherit. Administering for property is also a big issue, because I think we all know of, or even have in our families, instances where property would have been left from one generation to the next, but I guess through a lack of knowledge and, social issues, the property is not administered for properly, it never changed hands properly, and in the end, it ends up being, redacted by the state.
Yeah.
So I guess one of the drawbacks of real estate is that there's a lot of paperwork involved. Luckily, with a good real estate firm behind you, for instance, Scrio Business Group, we can help guide you navigating, the whole, all the challenges that you might encompass in administering for property. Not that we're lawyers, but we could put you on to good lawyers, and helping to make this legacy real estate an actual positive legacy. So I guess that's one of the negatives, is that we don't emphasize enough the need for education around managing property and ensuring that this property that you leave, this piece of land, this house, is actually a blessing to the next generation and not a curse. Because far too often, a house being left by Nana and then and whoever is a curse more than a blessing.
Correct, because everybody wants to the pie and nobody wants to give this one this and that one this one that.
Right.
But that is all right. They're going to cut me here now. That is why it's important to have that will, and when they do the will, to tie the change one time to the deed. I don't know why we don't like that. So at least we already signed on next door. It goes to this, even if you split the land. So like say for instance, our mother, she has 4 kids. She decided to split 4 kids, but she didn't officially do the deed to make the change, but the will stating that it was split between the 4 children. Usually is that issue, and then is it that, or is it something that just flow very easy once they have a will?
Yeah. So I endorse that wholeheartedly.
Okay.
No matter how old or how young you are, I think it's good once you have real estate or any asset really of note to prepare a will to ensure that things go smoothly when you're not here, because it's one thing to protect your family and take care of them while you're alive, but this is one avenue we could help take care of them even when you've passed on. So I fully endorse that message, man.
Good.
Right. And I guess part of the challenge is that we have when it comes to inheritance and subdividing, that sort of thing, is due to the nature of real estate, because there's the paperwork side of it, and there's also the fact that there's maintenance costs.
Correct.
And when ownership is not clearly defined, who pays that maintenance cost? And oftentimes you have one person in the family, the bigger brother or bigger sister, most times, who might pay for everything, and then nobody else knows what you pay, and then they won't be the benefits at the end. So that is an issue. And another challenge with real estate is that it's very illiquid, meaning it's not like a stock or a bond where you could liquidate it quickly, you could sell it and get the money quickly. Real estate is a process to get sold. So typically, when you want to sell a property, you'll have to go on the market, you'll advertise it. Eventually, maybe in a couple of weeks to a couple of months, if you have a good real estate firm, maybe in a few days, you might get an offer to buy the property. But even when we at Scrio Business Group, and I did a shameless plug here for Sciro, even when we find a buyer for your property, it takes between 90 and 120 days to complete the sale. So real estate is not an asset class where you can expect money right away. There's a process, there's a process involved in everything, because it's, such a valued asset that, there's a lot of paperwork and there is a process. But I guess that is one of the benefits to real estate, in that there are potentially very, very high returns. I am dealing with a client right now who bought a property in 2010, I want to say. So 11 years ago. And they're in the process of selling it now. and it is multiple times more valuable than when they bought it.
Okay.
And yeah, so there's a potential for high returns, and you don't have to be a big, sophisticated real estate developer, for example, to make money in real estate. As a simple thing as getting a piece of land. Let's say your dad left you a piece of land. Getting that land rezoned from the division board of from town country division from agricultural usage to residential usage or even commercial usage, you immediately multiply the value of that property just with the stroke of a pen. You ain't change anything, you ain't pave a road yet, you ain't put no lights, no nothing. Just this simple conversion of that land use conversion from one form to a more valued form, valued in terms of the market, increases the value of that property almost overnight. So that is one of the areas where. Hello?
I said, let me ask you a question. So, as you say, so like for instance, we know certain areas in both Trinidad and Tobago, we consider the land as being agriculture. If you switch that agriculture land to a residential or commercial land, that's what you're saying. It would be just a simple flip in terms of increasing your value.
Yeah, but that is regulated by the Division of Town Country.
I know that.
Right? So you guys just go. You're up in Pyramid. I said, hey, I want to build a 500-room hotel on the side of a mountaintop. No. And it's for environment. Say again?
I say you have to make sure and get the approval first to make that cheap.
Right.
All right.
And unfortunately, we have a lot of illegal developments taking place because I guess for better or worse, town country, they take their time in making decisions on what areas they're going to reclassify from agricultural to whatever. And there's such a demand to purchase real estate because everybody wants their own piece of earth, their own piece of paradise, and eventually build their own home maybe. That a lot of people resort to buying lands that are not approved by town country and homes even. But that puts you in a position where, for instance, you have to buy cash because a bank or financial institution will not lend you money to purchase property unless it's approved by town country. And well, in Trinidad at least, it has to be approved by the regional corporation. In Tobago, it's a bit different. We don't have a regional corporation over here. We have the THA. So the system is slightly different. So I guess you have that added layer of, the bureaucracy, added layer of approvals to go through. So that is, an aspect that people need to be aware of. Now, just because someone says a property is freehold, that does not mean that it is approved for sale for a residential house. And that is a misnomer that people get tricked with by some of these unscrupulous agents. But we at Sciro, we don't sell property unless it's approved by country. To just delve into that a little bit more,
I think
all freehold mean.
Yes, come.
Repeat again?
I say you freeze.
Yeah.
Yes, what you were saying about freehold again?
Can you say that again?
I said what you were saying about freehold. You were saying something about freehold and you're free.
All right. So when some agents advertise freehold to give the impression that, you can go and buy it, it's fine, you go to the bank. But no, that's not what it means. Freehold simply means that the land can be owned into perpetuity, meaning that once you go through the proper channels, I could pass it on to my child, my grandchild, and they pass it on and pass it on forever and forever, forever and ever. Amen. Whereas the flip side of freehold is leasehold, where you can have an interest in the property for a certain period of time, but you don't have ultimate ownership. an example of that is you see it more in the the more expensive luxury type of developments. So, for instance, in plantations in Tobago, where Magdalena Grand Hotel is, most of the for people in Trinidad might be familiar with Magdalena Grand, which was formerly the Hilton. The lands around there, I believe most of them are leasehold and not freehold, meaning that you have an interest in the property, so you could build on it. It's essentially yours for a set period. I think it's like 1,000 years.
Yeah, that's all.
But after that, it reverts to being owned by, I think, I forget the name of the company that owns it, Plantations Estates Limited or something like that, will then retake ownership after that set period. But in essence, 1,000 years leasehold, I ain't sure Trinidad to be able to survive for the next 1,000 years. So, so it depending on the lease term, like long, very very long lease terms like that, it really makes no difference. It comes like freehold. It's just a way to help enforce some of the property rules, right? So don't get caught in that trap of people telling, oh, the land is freehold. Yes, the land could be freehold, but that doesn't mean that it's approved for subdivision and resale. So don't get caught up in that.
That's the magic word. Or you get in that or that juiciness for the next episode. That's for sure. Because you hear people throw these words in your face. It's like, what is supposed to mean? And I'm so confused. So
Yeah.
you're correct in saying that they do put those words there to already confuse you. And if you really don't do the research and understand the concepts and what they really mean, you're really thrown off the back. Like, for instance, a few years ago, we were looking at I had my the land, and most of them were like, yeah, we start, blah, blah, yeah, we start, we can build it. But then when you want to do all the little research and things, no, I don't know, those who are, I said, what we buying, catch in the bag, literally.
The values true.
I have to go and do all that hard work to go and find out I don't want to hard work. But you know that's going to be a list of all kind of things. I said, go here, do this. I don't like hard work. Give me I am going to have minimum with.
Okay. Yeah, so a lot of people may not be, as knowledgeable or might not be able to do that due diligence, and they might get caught up. So that is something that people need to be worried about. So again, it's always good to get a good real estate professional, and I would endorse there's just a commercial long time, all mutual funds are not the same.
Yeah.
Right? All real estate companies are not the same. And so what I advise persons to do, even though is a real estate agent may be showing you the property, ask them if they are registered with the Association of Real Estate Agents or the Trinidad and Tobago Real Estate Association. I'm a member of AREA, the first of the two, Association of Real Estate Agents, and I can vouch for the level of training that AREA certified agents receive. And there's a level of confidence that you can have when dealing with an area registered broker when it comes to making because it's a huge financial commitment. And I guess that's one of the drawbacks in real estate is a huge barrier to entry, and that the cost of entry is so high that most people might only buy one property for their entire life. Because it's too expensive. So with such an important financial decision, it's always good to have well-trained and certified professionals on your side. And so I'll give a plug to all the area certified brokers in TNT. In Tobago, I think there are about 5 or 6 of us who are fully area registered. In Trinidad, you have quite a few more options, I think in the order of 30 or 35. So you have more options. So if you go to the Association of Real Estate Agents website, I think you just type in areatt.com, if I'm not mistaken, and you'll see a list of all the real estate agents and brokers that are registered with AREA and are held to a high standard. And, if there's any means for recourse, then you could always go through AREA, right, to avoid some of those pitfalls. But one more thing I wanted to touch on real estate before we wrap up is what I mentioned at the start about real estate being a piece of real estate being your asset or liability. Now, most forms, the form of real estate most people are familiar with is not a factory, is not a shipping yard. It is a house or a piece of land. And dealing specifically with a house. Now, a house, because most people need a mortgage to afford a house, that mortgage payment then becomes a liability. But more and more, I see people doing it and I encourage it to do what we call house hacking. And it's a very, very simple, it's an Americanized slang word for what we do long time, which is you buy a house and you put apartments on it.
Right.
So the idea is that you have multiple units on the property, and you might be able to live in one property, in one of those units, and rent out the others to someone else to help cover the cost of that mortgage. And in some cases, you might be even able to make money. I'm sure you know some persons who have done that sort of thing in the past.
Most definitely.
You sound like you do it yourself.
No, most definitely, because it's actually, well, when we first saw it, I think I was watching one of them HGTV, something I saw it first,
Yeah.
It was one of it. Yes, Chris and Joanna, correct. My people, Chris and Joanna. That was the first of the people that I saw about using back your home as to bring back income in to help with your, and it's like, yeah, why they don't think to pay into that or we just don't use it in that aspect. And then I started to see other people starting to use it here, and then it's something we use also here in the Caribbean. I wasn't aware that we were using it.
Yeah. So in my own journey on the investments and property ladder, so I was fortunate and blessed enough to purchase my own home in 2018, I'd like to say, in about September 2018. And so it's a split home. So essentially I live in one side and I rent the other units. And so the rent on that side that I don't live on, just about, not quite, but just about covers the mortgage. So essentially you're living without paying that mortgage. Right? And so what I advise people to do, I guess the holy grail. No, you can't do this for a hotel, for an example, because then a hotel will be considered a commercial property and you'll have to pay higher interest rates at the bank and that sort of thing. But in Trinidad and Tobago, once your property has 4 units or less, then it's still considered a commercial property, a residential property, and you're entitled to a residential rate in your mortgage. And not only is the interest rate a lot lower on a residential mortgage than a commercial mortgage, but you have a maximum of 30 years to pay on a residential mortgage, whereas in a commercial mortgage, I think the maximum is 15, sometimes it's as little as 10. So if you see anybody selling a 4-plex, a triplex, or a duplex, it could be as simple as an upstairs and downstairs house, where the upstairs could be separated from the downstairs. I would advise you to seriously consider it, because once you're okay having a neighbor, I don't know about Trinidad and Tobago, kind of culture. Nah, me no neighbor around me. You have a big house, you have a big yard. No neighbor around me. Once you don't have that sort of attitude, and you can set up your home also, so you can have multiple entries, that sort of thing, entrance ways, multiple driveways. So you don't need to see that other person. You just have your little corner. You could essentially live rent free. Well, you won't be rent free, but you won't be. You don't have to worry about paying a mortgage at the end of the month because it's covered by the renters. So that is one little nugget of advice I always advise to people. Try to get as much as, if you can get 2, good. If you can get 3, better. But if you get 4, that is a gold mine. So you can look for 4 units or less to invest in or build. Even if you're building your own home, because most people in TNT, they prefer to build. It's a cultural thing. If you start building with the idea in mind that you want more than 1 unit, maybe 4 might be a bit much if you just buy, you know, the average size lot, which is 5,000 square feet. 4 units is a bit of a stretch, but maybe you could do two different units on it, live in one, rent out the next one. So that covers your mortgage, or partially anyway, to take that financial burden off of you. So that's a little nugget of advice that I always try to give my clients, man.
I love it. I love it. Must always think about the rental income. The rental income. But I usually do that for entrepreneurs when they have their own spot. I think of rental income, but never thought about it on a residential level until I watched TV. Thank you very much. I don't say the same thing.
Yeah.
So the concept is there all the time. So it's always an easy way to find that passive income coming in, because that's where you're getting passive income, and it help relieve that financial burden off for you, as you said.
Yeah, Mr. Fad always tell me the sweetest money you could ever collect is rent money.
Yes, it is.
That money you collect, because that money working while you're collecting that money while you're sleeping, you don't have to do anything for it. Correct. Of course, you have to do the work ahead of time, but that money comes in, and once you have systems in place to manage the property and do inspections, and I encourage persons to do an inspection of your property, your rental property, at least every 6 months. Correct. To ensure that you know the tenant didn't mashing up your place and thing.
Correct. Because you know we have some naughty people like that, eh?
Yeah, unfortunately.
Unfortunately, so true. We have some naughty people. I have to thank you so much for taking the time off and chat with us. I love the information given. It was so much valuable, so much value to give, and I hope everybody will enjoy it. Get the time to sit down and listen and really understand some of the points he did break. Some of the things I do tell you all a lot, and he just reiterated, you know, like. But it was really nice. It was really nice. It was very educational. I definitely know I want to harass you more on that angel lending thing. I really want to let you jump into that angel lending. Definitely have to do that. Definitely. Because I know a lot of clients keep asking, anybody here in China does do that? We have anybody here does do that? So I definitely want to do that, because we need to educate all our people. Let them know everything that can be right in our own country.
Yeah.
Do you have anything else you want to add before we go?
No, but I just want to encourage everyone who viewed this little video to spend a little time in educating yourself on financial literacy. It will make the world of difference to your life and to the life of your future generations.
So true. So true. And I'd like to thank you all again, and bye.
Ciao.
Hi planners, I hope you all enjoy the wonderful information you all received from Mr. Belfon. If you all have any questions, you all don't forget to leave a message in our comments, or you can directly contact him directly on IG as well, right? Don't forget to look out for next week's episode, which will be all about the most important topic, real estate. I know a lot of you all want to get some juicy information about that. So stay tuned for next week's topic.